In this video, I will show you 3 high-quality growth stocks to buy now. Welcome to this YouTube channel. My name is Christophe Nour. I've been investing in the stock market for almost a decade with a performance of 25% per year. And I love these stocks. I own the 3 of them. That's very clear. So obviously, I will be biased, but let me explain what I see in these businesses. 3 high-quality stocks, 3 growth stocks, and I believe the growth will accelerate. The first one is Evolution AB. Evolution, in case you are new to this YouTube channel, let me explain the story real quick. They do games for online gambling, so this is not a stock for everybody. If you look at the financials for this stock, you see that everything is going up and to the right. Everything is enjoying exponential growth, whether it's the revenue here in blue, or the net income here, or the cash balance, or the free cash flow, everything. And now, over the past quarters, growth stumbled a little bit. Growth stopped. And there were worries. Is the growth going to continue or decline? Are they going to lose the market share? Are there some new regulations for online gambling? This is a sin stock. Now they plan to enter the US market for online gamblings, but the regulation is quite tricky. So will they do it properly? Now they were attacked by a cyber attack in Asia. So is Asia a problem right now? You have many worries, a wall of worry, and the valuation for the stock went down. In 2021, the stock had the large momentum. Valuation was a PE ratio of 60, 70, and now we are talking about a PE ratio of 15. Look at here, 15, 14. Quite cheap. And this is a business that doesn't have any debt, that still produces large free cash flow, and they are doing some buybacks here and there. This is a company in Sweden. They do dividends, 3% dividend yield, and now it seems like growth has stabilized. Instead of growing, in the past they grew 50% per year, so that was quite crazy. Now they grew 60% per year, that was crazy. Now they grew only 10-15%. If their plans of US expansion, of Asia getting strong, now they are having some strikes in Georgia, and it's almost finished. If there are no longer strikes, if workers are working, if operations in the US are working fine, if they are not attacked by cyber stuff in Asia, if this wall of worry goes down, there is a high chance that growth will accelerate. In the latest quarter, we've seen some acceleration of their segment about slot games, and I believe growth will accelerate. And the biggest correlation between the stock price, what moves the stock price, is the growth in revenue and organic growth, not acquisition, just organic growth. If organic growth for this company goes up, the stock will go to the stars, as we say. The stock will rebound sharply. And it seems like, we have a PE ratio of 15. Not a lot of things have to go wrong to get this stock up a little bit. The valuation is cheap on all metrics. You have an extremely good business model with very high margins. Look at this, operating margins of 60%, net margins at 60%, free cash flow margins 60%. It has always been the case. They produce a lot of cash. They produce a lot of free cash flow, and management has always been very competent and very honest for the growth for the company. So now they're having temporary issues. My plan for 2025 is to hold this stock and enjoy the ride. Enjoy the ride, because I think it will rebound sharply. What do I know? Maybe I will be wrong in 2025. Maybe it will go down by 30%. It can't go bankrupt because it doesn't have any debt, but it has a high chance of going up in the following years. That would be my strong guess. Maybe I will be wrong, but I'm biased, obviously. This is my second biggest holding in my portfolio. I have 12% of my portfolio in Evolution, so I'm biased, obviously. But yeah, this is a very good idea for 2025. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. The second stock is Amazon. You know the story a little bit better, I suppose. I own Amazon also. I bought it very recently. My bet is on AI, on robotics, on better margins, and on growing AWS, cloud, on the software part of Amazon is growing more. The software part has better margins. So the most profitable segment of Amazon is the fastest growing segment. So the overall margins for Amazon are very likely to go up. And additionally, you have robotics and AI that will boost up the efficiency of the business model. And we've seen with Jeff Bezos's latest interviews that he's back on the business. He's working on, not full time, but every day on Amazon. So if you have the founder that is here, if the founder is very motivated about AI and he sees the opportunity, I'm confident and I'm able to sleep at night fairly well. So Amazon, you know, it is a growth story, and I think that the growth will continue, if not accelerate. And margins are very likely to go up, and the efficiency is likely to improve. AI, the software part, AWS, the cloud, and everything is likely to continue to dominate. Amazon is very likely to dominate. And if you had to bet on what will be the first company to reach a market cap of $5 trillion, my first bet would be Amazon. After this, you have Microsoft or Alphabet or Google. So that would be my top three. But my first top one would be Amazon. So actually, you may think that Amazon is large, so it won't double in value. And let me tell you something. If you invest in a small cap and you think that it will 10x because it's a small cap and it can only go up, it's not often the case. It's not always the case. If you invest in a small cap with a monopoly and the market is saturated, the market is a small pocket. So the company can't grow into a multi-billion-dollar business of market cap. If you invest in a small cap and you think it will 10x just because it's small, it will get bigger, it's not true. If the market is completely saturated, that's it. You can't grow 20% per year. So you can be stuck to your small cap business. Now you can take the opposite view. If you invest in a large cap, if the market is saturated, it will stay a large cap. But if the market is infinite, like AI, like software, like the whole world of getting more efficient, the runway is immense. The market is immense. The TAM, the total addressable market, is large. So these large businesses can grow even larger, and they can continue to grow 20% per year. It all depends on your TAM, guys, on your total addressable market. If you're a large business and you continue to grow in addressable pockets of the market, you continue to grow and implement AI in all your solutions, you can double in value. Actually, you can triple in value. The AI market is likely to grow very, very, very far and to become maybe the largest market ever. And Amazon is into all the markets, all the industries, the pharma, the e-commerce, the software, the cloud, you name it. They are everywhere, and they are almost the best everywhere. So if I had to bet on one company that would grow to a market cap of $5 trillion, my first bet would be Amazon. And now the founder is here, the vision is here, Andy Jassy, the CEO, is here. I'm quite confident. And as the margins go up, as earnings go up, the valuation, statistically speaking, will come down. And now you have a PE ratio at around 40. It will continue to go down if they produce more earnings, 35, 30. So maybe the PE ratio is not the best indicator to look at valuation, because you want the company not to generate earnings, but to invest in growth and growth, to grow organically. But you have the story here. margins up, efficiency up, and stock price up. That would be my strong guess over the next few years. This is a wonderful growth story that is likely to accelerate. And the third one is a little bit niche. Come on, LB. Come on. The third company I want to talk about is Landbridge. Landbridge is a small company that IPO'd in 2024, so they went public 6 months ago, and they own lands in Texas, similar to Texas Pacific Land, if you're familiar with the name. And this is a smaller company. The market cap is not $1 billion. That's a mistake. It's around $4 to $5 billion. And you see the IPO in July 2024, and the stock has gone up and up and up. It's a triple year to date, and now you have a drawdown on approximately 20%. The margins are crazy high. The efficiency is crazy good. They have a few employees, and you don't have any track record for this company. So if you look at the quarterly basis, it's very hard to see what is going on. They have some debt. So if you don't know how to decorticate financial statements, if you don't know how to do the analysis of a stock, you may not see the value. But luckily, this is my job, so I see the value in this stock, and I think it has one of the best tailwind for the next few years. This is one of the best location you can get if you want to bet in AI. In other words, in the next few years, all the big tech, Magnificent Seven, Amazon, Meta, etc., they want to build AI. They want to go AI, full capex. And in this digital world that is likely to go more digital in the future, you need to build more data centers. Where can you build data centers in the US? You have some locations, some states, 3 or 4 locations like Virginia. Texas is a go-to area when you want to build data centers. Either, if you want to build data centers, you need a lot of energy. Either you go nuclear, so you need to build your data centers near a nuclear center power, or you can use gas, liquefied gas in Texas. To build data centers in the US, you need large unpopulated lands, large area. You need cheap energy, which Texas has with cheap gas, and you need water, because with data centers, they produce a lot of heat. You need water to cool things off, cool things down. Texas has the 3 of them, and Landbridge has lands in Texas, cheap gas, and they own contiguous lands. So it's very easy to transport the water in tubes, like plastic tubes for kilometers and kilometers, miles and miles. So they have the water, they have the lands, they have the infrastructure, because they work with a private equity company, they work with a water bridge. And if you think that AI will continue in the next few years, if you think that a lot of data centers will be built in the future, Landbridge is a perfectly good company for your portfolio. I'm about to sneeze. Anyway, it won't go off. So yeah, I bought Landbridge recently. It's a small part of my portfolio, and I plan to buy more. I'm greedy enough to wait a little bit if it drops a little bit more, but I'm about to sneeze now. That's also a fake. Sorry for that. Okay, that's fine. It's a second fake. So yeah, maybe I will do a video about Landbridge, because it can be a little bit tricky to decorticate how everything works. But that would be a long video in this case. I made a short video, 15-minute video. The title of the video is I found a cheaper Texas Pacific Land, a cheaper TPL, in case you want to watch it on my YouTube channel, explaining what the business model is about. But that's it. They have a small dividend. They want to do more acquisitions to acquire new lands. Management is competent. Seems like management knows what they are doing. And the growth rate for Landbridge is completely insane. They plan to produce $100 million of EBITDA, $1 million of EBITDA in 2024. And they plan to grow 70% in 2025. 70% in 1 year. And they have a new contract with the data center. They have new implementation of the lens, efficiency, etc. It is very likely that in 2026 they will continue to grow above 20%. So now we are at a PE ratio of around 30. If they continue to grow, you get a wonderful company with a complete moat, because you have lands. I mean, nobody can take them away from you. You have the lands, you have the moat, you have 90% margins, you have a driven management, you have a large tailwind because it's about AI, data centers. This is an industry of the future, very well positioned for the future. No capex whatsoever. This is a royalty business, and you have a PE of 30 for a business that can continue to grow 20%, 30% per year over the next few years. And this is very early. You are very early in the process. The company was public 6 months ago. Large runway, very, very large runway. And if you compare it with TPL, the valuation of Landbridge can easily go to $10 billion. Now the market cap of Landbridge is approximately $5 billion. Okay, it can double easily. But if you consider the estimates from management itself, in let's say 3 years, it can grow to market cap of $10 billion. And a double in 3 years is 24-26% per year. That's fine. That's fine. Completely fine. So do your own due diligence. This is not a recommendation to buy or sell. I'm obviously biased because I own these 3 businesses. But I think over the next couple of years, these businesses are very likely to grow and produce extremely good returns. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.